truths about money that banks don't want you to know, because if everyone would know that, that might be the end of the banking system. Number 1. Keeping your money in a bank is a scam. Let me ask you a question. How much interest would you earn if you deposit your savings in a bank? At first glance, it seems like at least a few percent for it to make any sense, right? However, if you look at the numbers, that's far from that. The top banks such as Citibank, for example, offer literally less than 0.5%. There are banks that offer a higher rate, but they're still less than 1%, especially since interest rates are at the bottom now. Think about it. Your money grows by 0.5%, while inflation is 2.5%. The intrinsic value of your wealth is literally decreasing every single year. You're far better off spending that money today than keeping it in a bank. The purchasing power of your money in a few years is going to be far less than it's now. And when inflation is skyrocketing as it's now, for example, asset prices such as homes, stocks rise exponentially, as we have seen happening in the last year or so. A bank is a place to park your money and not to make money. Number 2. Every bank has the right to create money out of thin air. If I would tell you that banks do create money, you probably won't believe me, because the only bank that's allowed to create money is the Fed. It's the source of the dollar and the only institution that has the right to that printing machine. However, the banking system works in such a way that every bank in the country, or in fact the world, is allowed to create money to a certain degree based on how much people have deposited in that bank. Let's say you deposit $1,000 in a bank A. What do you think that bank is going to do with that money? There is no point in keeping it. They wouldn't even be able to pay you your miserable 0.5%. So the bank lends your money to someone else who wants to buy a car, for example, or a house, and collects interest which often much higher than 0.5% that it pays you. An average credit card interest is 20%. That's literally dozens of times higher than what the bank pays you. The point is that the bank isn't going to tell you to whom it will lend your money. Whenever you check your account, the bank is going to show you that your money is still there in the bank. You can withdraw it whenever you want. So if your money is still there in the bank, where did the bank take the money to lend to someone else? That's known as fractional reserve banking. Banks are allowed to keep just 10% of the deposits and lend the rest. For every $1,000 you deposit in the bank creates another $900 and lends it to someone else, which brings the total amount to $1,900. The bank created $900 out of thin air. It's not as difficult as you might think, since they're just digits in the computer. Number 3. You can make money by borrowing money from banks and investing it elsewhere. In July 2012, Mark Zuckerberg financed his $6 million Palo Alto home that's 3 miles away from Facebook's headquarters with a 30-year mortgage. At that time, he was 28 years old and the world's 40th wealthiest person, worth an estimated $15.6 billion. The question is, why would you get into debt when you have billions of dollars and can easily afford it? If he wanted, he could easily buy a dozen $6 million homes in cash without batting an eye. So, why get a mortgage? It's free money. Sounds unreal, I understand. Who would give you free money when you're already a billionaire? I mean, why would anyone give anyone else free money unless it's charity? It all has to do with interest rates.